I find it fascinating just how quickly this space is growing. I can still remember some of the traders on the floor back in the day standing in front of their screens to try and prevent me seeing what was happening behind them, because it was just sort of like the perceived threat. When people talk about the threat of AI, I think it's just going to be revolutionize what we are actually able to offer organizations, similar to what you guys are doing at ipushpull.
Where's the role of the human trader going forward?
I think the job has become more complex. Historically, in the early days of electronic trading, the equity sales trader was the information hub. Now, all that's happening is that is moving to the agent, the breadth and depth of research that can be done on a particular asset or a particular company to make each PM more productive, a 5x, a 10x. I can't see anybody's job going away in its entirety, but I do think the jobs will change and evolve in order to become much more effective.
This is Matthew Cheung, CEO of ipushpull, and today we have Rebecca Healey, who is Managing Partner of Redlap Consulting and also writes the Mindful Markets newsletter. She's also co-chair of Fix EMEA and Fix AI working groups and sits on the FCA and ESMA secondary markets advisory committees. And she was also Credit Suisse's first registered electronic trader for European cash equities. So, Rebecca, welcome.
Thank you very much. It's great to be on the podcast. Thank you for inviting me.
So you're very known for market structure and you speak to a lot of people in the industry. But before we kind of jump into some of the topics we're going to talk about around AI, governance, trading, and how the market's moving very, very quickly and how regulated markets should or shouldn't kind of keep up with the pace of AI. Before we jump into that, can you just give a bit of background around some of your history? And you were kind of there put in some of the first waves of electronification, what we saw in the equities markets.
Yeah, now you're exposing my age, Matt. But so I was there at the outset, and I think obviously things at Credit Suisse dramatically changed when Rich Balakis sort of came along and sort of started up AES in Europe, and that was a really exciting time. But it just goes to show how far electronic trading has travelled over the last 30 years. But some of the challenges that we saw around adoption then, when it went from sort of DMA to algos, and now sort of from algos to complex algos, I think now we're seeing again in the move to agentic workflows and what does that actually mean for the industry and how people should respond. But it's still coming back to the core facet of there will always be innovation and there will always be evolution. And people have got a choice whether they either roll with it and see where it takes them or whether they sort of put up blockers to actually making the necessary change. I mean, I could still remember some of the traders on the floor back in the day standing in front of their screens to try and prevent me seeing what was happening behind them, because it was just sort of like the perceived threat. And when people talk about the threat of AI, I think it's just going to be revolutionize what we are actually able to offer organizations, similar to what you guys are doing at ipushpull.
You mentioned kind of that evolution and revolution. What about regulation? Where does that sit in the pace of some of these things that are happening very quickly?
Well, I think, and that is really important, because actually it just means that we need more robust controls over what we're doing already today. I don't see it as a massive departure, but we are going to have to adapt and evolve. And one of the areas that you just mentioned now, in terms of the speed of innovation, you can't have rules that are too prescriptive because things are evolving and changing. But you can have a central premise of, identifying the agent, knowing the agent, being able to trace the agent's behavior, just in the same way that we did with humans and we did with algos. That hasn't changed. But it does mean that we need to, as you rightly pointed out, it's that speed of, rather than sort of one and done testing a model, you now need to have runtime governance. And I think that's some of the evolution and the changes that we're going to see.
And how is it, because you're part of the FCA's secondary markets advisory committee, how responsive is the FCA as a regulator compared to kind of other regulators around the world? Because they always seem to be probably on the more open-minded, cutting-edge, kind of faster-moving. Would you agree with that?
I think it's really interesting. If you go back to so Cambridge University, the Alternative Centre produced some research back in April on actually the differences between regulators and industry in terms of AI adoption internally within their own organisations. And there was a discrepancy, quite severe discrepancy. You're not going to put the FCA in that bucket. They've clearly made huge pains to sort of move ahead with AI. They've got the AI sandbox. There's also a real change in approach in terms of thinking around AI, and that the Sheldon Mills review, which we featured in last week's newsletter, that was obviously, that's a big step change in terms of thinking around how agents are going to have a role within consumers in the UK. And I think it's all very welcome in terms of the open discussion about how we can actually work better with machines in the future.
Yep. And I suppose that FCA sandbox as well is a way for them to be exposed to all the latest cutting edge technology, so they are aware rather than playing catch up.
Oh, 100%. But again, it goes back to the pace of innovation and change. And I think that's something that we all have to be cognizant of, because if I think about so I started writing about AI in trading back in 2019. When it was more sort of actually, what will this mean from moving from more sort of what I would have described then as flat deterministic models to incorporating natural language processing, neural nets, all the rest of it. And now we're obviously moving into more generative aspects. But even from starting the newsletter back in February 2025, there was a real industry pushback on generative AI will never be involved in execution because, of course, you need to have a deterministic outcome whenever you actually place a trade. But I think it's the level of understanding of data and analytics, which people now widely accept are used in workflows. That's a crucial part of making your trading decisions and deciding where you're going to execute. Mm-hmm. So, of course, it's evolved in execution, which means that we've got to start thinking about things differently rather than saying there is a neat bucket between idea generation and then execution over here. And actually what we're starting to see is that iterative workflow that goes backwards and forwards in terms of you find something out about market activity that then changes where you might want to place an order, how you might want to trade. And this also goes back to what I mean about the evolution that we saw in algo trading. Credit Suisse, AES, they were the first ones to introduce Gorilla. So this idea of actually the algo would take live market information and rather than trading a flat VWAP, would shift to a more aggressive implementation strategy or a liquidity seeking strategy. But that was, that was back in sort of the early 2000s. So you can see that we've had a bit of a lull, and then all of a sudden we've now got a ramping up of what algos are actually capable of and how they could interact with the market. And it is that cross-asset nature, which I think is particularly interesting, because historically we managed it well in equities, but then when we tried to move across to fixed income, it didn't work as well. And then when we tried to go to OTC products, it didn't work as well. But what is interesting now with AI is the breadth and depth of information that can feed into your execution decisions, which just opens up another world of what people can trade and how they can trade.
So where does something like FIX as a standard and a way of having data in a harmonized way that different firms can ingest and automate and do things with it and so on, where does FIX and the world of standards sit in this world? Because if you have AI models, they will work better on a structured set of data than unstructured, because there's less guesswork required for them to interpret what's happening. Adding that structure to things is always good for AI. So where is FIX's place as we go forward with standards around AI and data? Or is it the same?
Well, I was going to say that there's two elements to this. If we think about FIX as the communication channel between organizations, So you could create a lot of standardization internally within your own organization. You can understand what your agent is doing and you can garner the information, and then you pass that information out externally. I think in exactly the same way, fixed protocols started 30 years ago because, I was walking around the city talking to hedge fund traders who had a box on their desk to interact with Goldman Sachs, and then a box on their desk to interact with UBS and Morgan Stanley. And they used to have to plug in and out of each one just to send an order to the market. And the hedge fund guys then were saying, we just want one means of interacting with the market. So we're moving towards that, only now it's very much cross-participant, cross-asset. It's a very different means of trading within the market, and you need protocol to pass that information from one participant to another. Now, what FIX does very well today is it identifies the firm and it identifies the algo. But what we've noticed in moving agents into this arena is that we've started to see there are growing discrepancies, for example, in the way that sell-side firms might choose to interpret the information and pass it back in a fixed message. So one of the first things that we came across when we set up the AI working group back in June 2024 was there's a whole plethora of versions of fixed tag 527, and some firms recognize fixed tag 2405, others don't. So the real building blocks are starting back again of saying, okay, if you use this fixed tag, these are the ways that you should complete that fixed tag so that people can start taking the information back from the market in a more standardized form to build their models and build their agents. Now, where it gets interesting in the ideas that we're thinking around the agentic workflows is, first and foremost, you need to be able to identify the agent. And what we're now thinking about is, in the same way that in Europe, no LEI, no trade, we're suggesting that you should have no LEI, no agent. So you could have sort of a verified legal entity identifier that identifies the agent and then links that to a human in terms of authorization. So you've got the ability to identify an agent. Now, there are challenges with that because obviously firms have thousands and thousands of agents. But I think it's not necessarily that you have to know what each individual agent is doing at any given time, although you do need the governance framework around it. But I think it's more about the identification of something where it goes wrong. Secondly, it's the what we are describing KYA instead of KYC. So do you actually understand what the agent is supposed to do, what its intent is? Have you got guardrails and controls around that particular agent? And this is where I think it gets interesting with the Hugging Face episode, because it's sort of like that should have been an automatic, actually, that agent has stepped outside of its guardrails. It's doing something adversarial that it shouldn't have been doing. But there should have been a hard line there. And then it's around the sort of the authorizing chain of, you've got a human that's decided this is what we want to do, or you have an agent which has been given autonomy to do a particular task, and that then is set off to enact that. But you have what we're now describing as a deterministic control envelope that sits around that, evidencing that you've actually got governance around the process, and then that leads into the execution. So it's not necessarily massively deviating from the human trader and then the human trader using an algorithm. We're now passing some of that autonomy on, but there's still that governance and the workflow process that you can introduce checks and verification. But again, going back to thinking about this as runtime rather than you've got a model, it goes through the risk committee, you put a tick in the box and then you forget about it. I think now it's got to be much more ongoing and continual, which is exactly what FIX has discovered in terms of moving from algo trading and the best practices that have been introduced around algo trading to more complex algos, which is what we're starting to look at now. And that leads into the broader market interaction between different market participants and ensuring that you're not contributing to disorderly trading.
Just throwing out lots of questions for me there.
Okay.
So on the LEI kind of piece, and But more high level than that, if you had kind of your agent and know your agent process, who would be issuing those credentials, and how would you verify them?
Well, this is actually one of the reasons why, in collaboration with the Fix AI working group, I'm also part of ISO TC 68 financial services. And this is something that we're looking at in relation to AI for financial services. And they're also looking at this idea of the agent would have a VLEI, as it's now being described. One of the ideas that we're talking about is should it just be the firm? So in the same way that the firm has an LEI, and this is what I mean about leveraging what is already in place. And then essentially you could just have a numbering system within the organization that could go to infinitum. But again, these are the ideas that we're trying to discuss within both working groups as to how this has to play out in practice. But given that you have to have an LEI in order to trade in Europe, that seems a natural progression to link the agents to that legal entity firm in order to have a level of similarity. So we're not massively deviating from what compliance do today, but we're also making sure that we extend it to cover agent activity.
Yep. Second question was then around, so Fix in its nature is helping external kind of counterparts and firms communicate in a simple kind of way where they can understand the instructions going backwards and forwards. Obviously, there's a lot of talk about MCP, which is also a protocol, but sharing context, which then is going to help an agent, look at information and so on. From what we've seen, there are people that are using MCP internally to do lots of things, and it's successful. But as soon as you start going externally, that opens up a whole new bunch of challenges and issues and problems, and that's where everyone has got a core focus on the governance and guardrails, because just having one little entry point, for an agent to plug into your MCP, then in theory can give them access to everything, which then becomes, well, you can't do it unless that governance and control is there. What's the current thinking from like you mentioned, like Fix and ISO and so on? What's the current perspectives on MCP, and what are you seeing and hearing?
Look, I mean, the bottom line is we have to work with other parties. So A2A, MCP, that's, FIDO is all part of the process that we're looking at. I think the point that you raised, though, is it's the minute that it leaves that organization, it has to be in sort of a standard recognized format that it isn't open to interpretation in terms of a particular protocol. And also the governance around, each firm is going to have a different level of approach to risk and governance, because that's just the very nature of organizations. But as soon as it leaves that organization, what is the information that needs to be sent on in order for the instruction to be followed in terms of a level of best practice within the industry in its entirety? And I think this is one of the areas that's becoming more and more interesting as you move from equities asset class, which we all know and understand, and move into other areas like carbon markets, like tokenization, like digi assets. We're going to have to adapt and evolve what the Fix protocol is for. But first and foremost, I think it needs to be that internationally understood communication channel, so that, the packet leaves the building and then it's received at the other end and everybody understands the information that is exactly within that process. But you also have the ability to be able to trace it back. That, I think, is going to be key to understanding if an agent does do something adversarial, whether intentionally or otherwise, that there is a means to be able to identify the workflow process back.
You said around looking at agents in kind of runtime and treating them as the same as we'd treat individuals and so on. Obviously, before you get to that, the things that these agents are running on is some generative AI large language model sitting somewhere. But as we're seeing every single day that goes past, there's some new model that popped up that's better than the last one. So models it's a race to zero, like it always is, right? We've seen it already in electronic markets where you get into microwave signal and milliseconds, microseconds, and what have you. Similarly with models, they are now commoditizing, where we can expect that pace just to continue. As models then commoditize, there's no particular edge in having one over the other, and people probably plugging into originally was whatever their cloud provider could offer, and they'll just plug into that. And, if you went back 2-3 years ago, whereas now it's obviously on the enterprise level, Anthropic is absolutely taking over in terms of the usage of Claude. Where it started out with ChatGPT, now everyone's using Claude and Claude Code. As that commoditizes, though, where's a firm's edge with these tools?
Well, you're absolutely right. I mean, everybody was talking about prompt engineering. Now it's context engineering. Now I think it's also sort of which frontier model is best for which task. And, this goes back to some of the conversations that we had in the AI working group last year with, one of the hedge funds that was involved, who was explaining quite clearly, I use this model for this task, this for this and this. And also as the cost is coming down, but the sort of token usage is going up, and then the cost incurred there. And I thought it was super interesting in the JP Morgan quarterly results that came out, where they were talking about actually with now, rather, we had sort of this, everybody used ChatGPT to like, oh, hang on a minute, don't touch it because we know how much this costs. So first and foremost, it's about the difference between the actual models and how they're used, and firms getting a better handle on who needs to use what, where, and when. So again, it's the prompt, not just the prompt, but the context and the harness that sits over the top of that. But also, I think it's slightly interesting in this whole sort of sovereign AI element, and that move from US frontier models to the Hugging Face incident. They were actually using the Chinese model to get into their model to be able to establish where the problem lies. I would definitely agree with what you said in terms of models are they're becoming ubiquitous. It's like electricity. So, and we're constantly seeing that evolution. But I think what we've already seen is the move from it matters about how you prompt to the context that you're looking at to now sort of harnessing the whole usage of the model. There's been a number of developments just within of late in terms of firms such as JP Morgan, Citi, Microsoft, all explaining exactly how they're really honing in on how individuals within their organizations are using frontier AI. But I think what I'm more interested in now is not only the pace of frontier AI, but the ability, all the challenges that the industry faces with the sovereignty and the pulling of a product. So we all saw it in Mythos, and what does that actually mean for organizations? And then the gradual re-release of Mythos to the industry, along with what we're seeing happening in China and the DeepSeek and Kimi 3, that ultimately is going to lead to a very different approach of firms having to think about what do we keep internally and who can we work with as external partners and ensure that we have business continuity. Because it's this whole area around operational resilience and cyber risk that is becoming, firms have had these processes in place since we started electronic trading. But the way that they need to be front and center now and be thinking about the more adversarial aspects, whether they're real or not, it's changing the lens in which you look at this about how can we make sure that we are protected at all times. I mean, if you had said that we would have seen that pull of Mythos in literally a matter of days, that people suddenly waking up and realizing they had no access, I think that is a real wake-up call for the industry in terms of where we see this going.
Yeah, it was one of the US bank CEOs was kind of saying, you're giving ballistic missiles to the man on the street with like Mythos. So where are you seeing any firms that are like a US bank is not going to use the Chinese model, but are you seeing any European firms, using some of the Chinese models? And like you said, you might be happy to use Anthropic or OpenAI's models for a bunch of stuff, and you might use Chinese models for other things. Are you seeing any use of those open source Chinese models in regulated institutions?
Look, I think there's a lot of talk about people experimenting with different models, and that's that's obvious. I think in terms of how this will be seen from a regulatory perspective, I suspect we're going to see a much more aggressive approach from the US in this particular area. But one of the things that I've been struck with when I'm sort of talking to industry participants, because the Fixed AI Working Group is global. So, we talk to people in different jurisdictions and how they're using. There's been interesting outcomes in terms of people feeling that actually the Chinese models are good and robust, they're cheaper. It's not necessarily, I would say, European firms, but, again, it goes back to we've got to start thinking about this much more of an open mind and each individual firm will have to get to the point that they feel comfortable with in terms of, are you actually acting off-prem, on-prem, even if it's in an enclosed cloud, actually, do you want it internally and use potentially a slower model? But then you're much more comfortable about how that operates and where that use of data is going. Then you go back to the point about how do you actually communicate between other organizations and going externally. So I think you have to look at your AI strategy in terms of your own potential level of comfort internally within your organization and what you actually do with that data, because obviously data sharing and data governance means different things in different jurisdictions. So you've got to adapt to that. And then it's how do you engage with other market participants and the interactions that you have with the marketplace. And that goes back to this core premise of, you're only as good as your weakest link. Mm-hmm. And that is where potentially as an industry, we might not have spent as much focus on the robustness of operational resilience as perhaps we could have done, because everybody was racing to create the greatest and the fastest, most intelligent algorithms, and maybe resources weren't shared in perhaps the same way. I think there's a bit of a rethink going on about that at the moment. But I don't think you could say US front-end models are good, Chinese models bad. I think, again, it's, it really depends where you sit on the globe.
Yep. And to finish off, where's the role of the human trader going forward? And this is a question that people have asked themselves probably for the last 20, 30 years, right? And people always adapt and machines always adapt and markets evolve. What's the role going forward now?
Yeah, I mean, there was the legendary joke, wasn't there? I think Richard Balakis coined it first, where, electronic trading means that there'll be two traders and a dog. And on the trading floor, and the man with the dog is there to monitor the guy who's actually doing the trading to make sure that he doesn't disrupt the machine. Look, you've only got to look around. Traders have not disappeared. I think the job has become more complex. What I personally find interesting is how is it impacting the ecosystem. Historically, in the early days of electronic trading, the equity sales trader was the information hub, and they had a really valuable role in that process. And you had to talk to that electronic sales trader in the same way that you had to talk to the market maker back in the day, because they were the eyes and ears of the market for that particular stock. Now, all that's happening is that is moving to the agent, but by the same token, it's really expanding how people the roles of the particular individual in terms of the breadth and depth of information that they can look at and oversee. This podcast is all about trading, but one of the aspects that people keep talking about is the breadth and depth of research that can be done on a particular asset or a particular company to make each PM more productive, a 5x, a 10x level of productivity. What we're starting to see that moving into on the trading desk is traders looking at PM's capabilities and what they're delivering and instigating. And is that still relative based on current market conditions? So you're seeing a bit of a split in terms of what's your investment horizon? Do immediate market activity, does that impact that investment horizon? Do you need to respond to it? So you're seeing a much more iterative process. So there might be more activity, more volatility, more need for oversight. I can't see anybody's job going away in its entirety, but I do think the jobs will change and evolve in order to become much more effective for what's now needed to happen.
Yeah, and there's different accessibility to information now that you can use these tools. One of the things that ipushpull is looking at, we do a lot of workflows where we're structuring data for taking unstructured conversations in chat, structuring it, and then turning it into a fixed message or somewhere else, so people will automate workflows rather than rekeying, double keying, the classic manual workflows that you see. But then the other side, where on some of those kind of trading workflows, you might be dealing with desks of people in the tens or multi-pods in a hedge fund. When you then actually look at, okay, well, now I've got a fire hose for all of the chats across an entire organization, that customer can then extract out, you might have a rumor of non-farm payrolls comes out, or Trump's just been assassinated, or something that's going to move the market. That might come in one chat across an organization with 2,000-3,000 salespeople and traders across it. How does that information get shared at the moment? Or copy paste, blast, and then you're relying on someone to see it. But now you've got the means for an agent sitting in that chat that could see it, that can flag it up in real time to everyone. So the way information is handled, and I think it goes back to what you said at the very beginning, you're not seeing agents and generative AI involved directly in execution right now, but they're indirectly involved in it through enhancing the data and analytics and the decision making that leads to an execution. So it's all symbiotic, isn't it?
It is, but it's also what I think is particularly interesting from my perspective is it changes the role of the trader. So the trader has always been the eyes and ears of the market, but now they can be more effective eyes and ears relative to what matters to a particular PM or a particular end client. And that makes it much more bespoke and more value add. So this is where I see enhancements to the actual role rather than the role in its entirety disappearing. Now, there are those people that say, well, an agent will be able to do that on your behalf, but there's an important element of trust and the relationship, which I think even if you've got an agent there, you're still going to want to verify it with a human in terms of this is the process that we're running. Are you checking it? Is everything going according to plan? Are there any areas? And that's the difference that we've got to adapt and evolve the governance and the process around that. So it's not just human led, but it is the human has the oversight and not just the context, but the ability to discern when everything's running well and when it's not. I think the human's going to stay in the loop for a long time to come.
We have an autonomy slider in one of our products where there's different levels of human in the loop or agents interacting with the particular kind of workflow. So one end of the scale is humans are in control doing everything. Then you have human in the loop where the AI is assisting what they're doing. Then it's human out of the loop where the human becomes the exceptions manager. Then you have your full autonomous kind of agentic workflows. And at the moment, depending on the workflows that our customers are looking at, either sits between human in the loop or human out of the loop. But there's a human somewhere, right? Because they still have the knowledge, the expertise, the ability to look at lots of different things that agent might not have access to.
Very true.
So Rebecca, you write about this stuff all the time, and you've got an excellent kind of newsletter and blog. Where can people find that?
To sign up on mindfulmarkets.ai. And yes, you're right. I produce something weekly. It started off that I needed to produce it because I couldn't find enough information out about how AI was impacting trading. So it was a good discipline for me to actually start researching on a weekly basis. And it's read by regulators and market participants alike. I find it fascinating just how quickly this space is growing. Going from an industry that was adamant that AI would not be involved in trading, has been the gradual recognition that actually we had AI in trading right at the beginning. Now it's just moving to more exciting things and a greater cover of assets and means of trading, which I think, particularly for the OTC world, is only going to get more and more interesting. And
apart from the various conferences where you're hosting and moderating panels, how can people follow you?
On LinkedIn, I guess.
We'll drop that in the comments. Rebecca, thanks so much for joining us today.
Thank you for inviting me. Super interesting as usual.